Good afternoon and welcome to Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. It's that time of year again. We're going to tackle being ready for tax season. And Andrea, that's the question today. Are you ever ready for tax season? Thank you very much for joining us. Andrea is the tax specialist over at NerdWallet. And that really is what the question is, especially when it comes to taxes. Is it more of a do-it-yourself process, or do you hire a tax professional?
It's really going to depend on your situation. So if it's a relatively simple situation, you have income from, say, one employer, you take the standard deduction rather than itemizing, then yeah, the tax software that's online you're a really good candidate for doing that. Also, you need to think about whether, as you're going through that software, do the questions make sense to you, or are you feeling pretty comfortable with the process? Then by all means, that tax software can be low cost, it can be a quick way to get your taxes done. On the other hand, if your situation is complex, maybe you have income from another job, a freelance income, maybe your situation changed really dramatically from last year to this, then you might want to consider going to a preparer. And one other thing there, if you want guidance and advice, maybe to plan ahead for next year's tax time, then you want to go to a professional preparer.
What do you look for if you're hiring a professional?
One thing that you definitely want to look for is make sure the preparer has a PTIN. That's a Preparer Tax Identification Number. The IRS requires people who get paid for doing taxes that they have a PTIN. So you want your preparer to have a PTIN. Also, you want to make sure that person is well established. Have they been in business long, or have they been in this location long? And the reason that's important is there are scammers out there. They set up shop, they take people's money, and then they disappear. So you want to make sure you're going to a well-established person. And finally, it can be a good idea to think about going to an enrolled agent or a CPA. These are people who can actually represent you in front of the IRS if you are ever audited. It's actually unlikely that you'll be audited, but if it does happen, this is great insurance to have that person behind you.
The other question is, how can you fast track your tax refunds?
Pretty simply, one, file online, which most people do nowadays anyway. But the second thing is, when you're doing your taxes, make sure that your refund is directly deposited into your bank account. You don't want it mailed to you. The check will take longer.
All right, well, the real ugly question is, what happens if I owe Uncle Sam more than I expected to pay?
It's never a fun surprise. We don't like that situation. First thing to remember is you want to file your tax return. I think some people are like, no, I don't want to deal with it. Definitely file your return, because there are separate penalties that you might owe if you don't file your return. So either file a return or an extension. Now, with the bill, the first thing is try to pay whatever you can. You're going to owe interest and penalties on unpaid tax debt. So you can just start paying, a little bit even now with your tax return will help. And then look at the IRS's website. They actually have payment plans. Yeah, they do, and they can be really helpful. There are different plans depending on how much you owe, but definitely check that out. It's a good resource. Finally, I would say, just so you're not in this situation again next year, think about looking at your withholding at work, because usually if you owe money at tax time, it's because you haven't had enough withheld. So you can go to your employer, adjust your W-4, and that way this time next year, you won't be facing the same problem.
Now, if you're self-employed, there's another set of challenges that you have. I would imagine the big one is make sure you have money put aside, right?
Yes.
But what are your top tips?
For self-employed, it is more complicated. Generally, one of the biggest tips is really you want to be sure to get all the deductions that are coming to you, because business expenses. Say you're an Uber driver, you can deduct the cost of maintaining the car. If you work at home, you can deduct the cost of your home office, and these are really important ways to reduce your taxable income. And something else to think about, if you're self-employed, under the new tax law, there is a new deduction for eligible businesses where you can take 20% right off the top of your income. That's going to be really helpful to people. That isn't going to apply on your 27 tax return that you're filing right now, but it will apply when you go to do your taxes in 2019.
Are things going to get more complicated because of the tax reform that's been passed?
That's a great question. It's really going to depend on your own situation. Now, one of the big changes is that the standard deduction is almost doubled. So that means more people who used to itemize will probably take the standard deduction, and that does make your life simpler. You don't have to have all the receipts and log those deductions. But on the other hand, for instance, parents might be really happy to hear there's this an expanded tax credit for children. It's $2,000, up to $2,000, and some part of it is refundable, so that's good news. But on the other hand, Personal exemptions are gone under the new tax law. So people with big families, they used to be able to take an exemption for each child. It's basically a deduction more than $4,000 per dependent. That's not going to be happening anymore. So when you go to file in 2019, file your 2018 taxes, no more personal exemptions, but you do have the higher child tax credit. So there's like, pros and cons depending on the situation. Homeowners too, the people who deduct their property taxes, there's a new cap on that property tax deduction. So those people, that might be an unwelcome surprise.
Especially if in the tri-state area.
Yes,
sure.
It's huge, it's huge. And then one other thing to think about is people who bought a house on December 15th or later, they will find that the deduction for mortgage interest has gone down. So if you own a home right now and you're deducting your mortgage interest, nothing has changed for you. But new homeowners, they can only deduct interest on debt up to $750,000. So that's a change. I could add one more thing.
Yeah,
the tax law. So the tax law. So something that will affect all of us is the tax brackets have changed. So that's actually reducing the income tax rates we pay. So that's a change that applies to nearly everyone.
So that's a positive thing.
Exactly. It is positive. Absolutely. Absolutely. One thing to think about is it expires in 2025. Some of these provisions expire in 2025, so that's something else to keep in mind.
I'll still be working.
Right.
Well, thank you very much for joining us today, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.